It's Friday, September 13th, 2024, episode 248. But you will be seeing this or hearing this on September 20th as we have pre-recorded the show. I'm Kevin Muir, and my partner, Patrick Ceresna, is hosting one of his big picture trading events, so I'm all on my own. But fret not, as we have a terrific guest. Mateen Chaudhry, author of the Discuss the Tape Substack newsletter, is here, and we're going to talk about Japan, how the carry trade is affecting the global markets, and what Mateen is buying to take advantage of this. Mateen, thanks for joining us.
Thank you.
You're real sport because you're actually in Australia, right? And you're getting up at the crack of dawn.
That's right. I've been. It's about 7 here. I'm in Brisbane, Queensland, but I've been up for a few hours because the dog's not doing too well. So
that's right. I'm sorry to hear
that.
Had
a lot of coffees this morning.
I'm sorry to hear that. It's always tough when you have an older dog. All right, so let's learn a little bit about you, because although you're in Australia, you're actually from Britain. Is that correct? Like, where did you grow up, and did you always know you wanted to get into the financial markets?
Yeah, so I grew up in the UK. I went to college there. I got lucky when I was about 21, I guess. I got a scholarship to Japan.
Okay.
To study for a year at Waseda University. Up until that point, I had no real idea what I wanted to do, to be honest. And was
had Japan always interest you, or was this just kind of a large
for sure? It was always kind of like an interesting area. My dad had traveled a lot, and so when we grew up, we always looked around the world. You know, it was kind of a global perspective, and I went to Tokyo, and it sort of changed my life when I was about 21. I got a bit more direction, met some amazing people who are still my friends today from all over the world, lots from America I studied with. And a lot of those guys were much more focused, knew what they wanted to do than I was. And it was great, so we, a lot of them were talking about finance, and it seemed like a great way to make money, to be honest.
And what year was that? Can I ask? Like when
it was 97, 98.
So Japan was already on its way down.
I'm sorry?
Japan had already kind of peaked and was on the way down.
Yeah, very much so. It was, I should have gone to Beijing or Shanghai. My timing was awful. And, Japan had already, was 6 years into what was almost like a depression in the 90s. But I didn't realize any of that. I didn't appreciate any of that. I was too young,
Right.
It was great time, awesome experience, and got me hooked on at least Asia as a sort of area to look at.
Now, did you learn any Japanese? Like, was your schooling in English?
No. I studied Japanese in the UK.
Did? Yeah. Wow.
At Oxford. So it wasn't so random, and
so you're fluent. You were fluent when you went.
I was pretty good. Pretty good. I think it's got a lot worse. You got really good. I think I was reasonably good at 22, 23, and then it's been downhill since then, to be honest.
I find I went to French immersion, and I find that I still can recognize things, but when I try to recall them, the words just they fail to come to me. When I see them, I recognize them.
So, yeah. So, I actually can read a bit, but when I'm in Japan and I'm seeing a company or something, the words don't come out. Right. And it's embarrassing because you sound like you're a toddler, You go really well, and then you hit this wall and you can't really say exactly what you want to say.
All right. So you're 21, 22, you graduate with a degree. Is that a degree in finance, or is that just what is that degree?
No, general liberal arts degree from the UK. It's very different from other parts of the world. And then I was lucky enough to get a job with a UK fund manager, and as a assistant fund manager, and they let me really start in Tokyo, which was amazing. I would fly back for training and to London, and it was an amazing experience. You're just out of college and you're flying business class back, and you just thought you were amazing. But the realities were very not true. It was coming from my educational background, going into a deep analysis role, I just was struggling, like I hadn't done enough finance to really get me up to that sort of level I needed to be. And so quickly I realized that the best place for me was on the sell side. And so I sort
you figured you didn't know anything, so you're going to go and sell stuff?
Pretty much. Yep. Pretty much. And I realized that, it made sense to get on the sell side and sort of boil everything down to 3 bullet points on any stock. And so I got into sales trading at JP Morgan.
And is that in Tokyo or is that back in London?
That was in Tokyo.
Okay.
Which was, and that was sort of early 2000s. So it was pretty rough markets. But, then because they were hedge funds sort of started emerging in Asia in a big way. Obviously you had the Asian crisis, and then it sort of, in 97, 98, sort of 98 time. And then again in 2000, there were a lot of hedge funds, and it was, it was a good time to have done a little bit of financial analysis and then come to the trading floor. So you could at least sort of have some idea about stocks. And I did quite well with hedge funds.
So were you in the equity department, or were you covering hedge funds across all asset classes?
No, just equities.
So you were doing equities, and were you selling to Japanese accounts U.S. equities, or were you selling Japanese equities to U.S. or London or whoever, whatever?
Well, to U.S. predominantly.
Okay.
Japanese equities, but also at the very beginning, I did some domestic Japanese accounts, and again realized that maybe my Japanese wasn't good enough to be honest. It was, it's when it gets really, really, intense. It was like, maybe I'm not that good.
What's it like in terms of, like, I've never spoken to anyone that's traded actually Japanese equities, and I'm presuming over the years you've chatted with your other sell side compatriots that are like trading in New York and stuff like that. How would you say that the trading in Japan differs from the trading in like New York?
Well, I lived in New York and I traded there a little bit later on in my career. And I think, well, the sales trading experience or being on the trading floor in Japan, the first thing is it's a lot more of a flat structure. So when you're young, you can cover all the big accounts, right?
Really?
That's the first thing. Yeah. So, there's just, fewer people there. So you actually end up covering all the top institutional accounts and all the top hedge funds very early on in your career. So that's a win.
Yeah.
But in terms of the day-to-day trading, I think Japan, it's quite an easy market to trade like the US is. There are other markets in Asia. You need, structured product to enter them. You need some sort of, swap agreement to buy the domestic shares, whereas Japan is actually quite easy to trade.
Right.
Now, is quite a volatile market intraday, pretty much like the States was. But I think overall, it wasn't too different from, say, the States. When I lived in Asia later in Hong Kong, some of those markets were trickier just because you needed access products to get into.
Right.
So Japan, the message to people is Japan's actually quite an easy market to access. You can, on your interactive brokers, you can trade stocks quite easy.
Yeah, no, I'm the same way. One of the things though that I found, like as a Canadian that had US clients coming into our market, like Canadians were mopey. Like you'd go and someone would say, where do you offer? Like in my day, we were trading Nortel. So someone would go, where do you offer 250 Nortel? And you'd go like up a quarter. And they would go, I'm bid here on the bid. And then you'd sit there back and forth and stuff like that. And Americans would come and you go, where do you offer 250? And they would take it. And then they would go, where do you offer another 250? I just found them to be much more aggressive, like the clients themselves aggressive. I would have thought there would have been that same sort of kind of contrast, and even more so with Japanese.
Well, it's interesting to say that. So the big Boston accounts, for example, in the States, if you got an order for them and they did ask you for an offer, it was good and bad. You didn't really know how much they had behind. So the facilitator would sort of shout at you after a while, manage your client, and use expletives. Whereas in Tokyo, at least at the beginning, when I was doing it, it was a lot more agency trading. So they would send over an order and you'd work it in the market. But, towards the end, I mean, there were a lot more sort of principal offers and bids, but it wasn't very much in that way. The States was very different. When I got to the States, I was amazed. And obviously, the size in the state, Japan's a very liquid market, and, you can trade good size, and that's why it's an interesting market. But, the US is just insane.
The US is the US. It is actually the biggest, most liquid market in the world. Like you really, until you can't really appreciate it until you're trading size and you just realize, holy smokes, that just ate that. And that had no problem at all.
That's right. I mean, it's when you're in Asia, sometimes you look at the States and, you're having these meetings at these US investment banks, and they're sort of, Asia's like the last 2 minutes of the call. And when you get to the States, you realize why, because the US is just so big. There's so much going on, So.
Okay. So you're on the sell side, and how long do you do that? And what eventually makes you switch?
No, I was trying to, maximize return. And so I joined UBS a few years later, and then they moved me to Hong Kong. And then in 2008, the world was feeling like it was going to end that summer, even before, it all ended almost. And I was lucky enough to get, I think, the final, a very nice situation with Deutsche Bank in Tokyo. And then I went back to Tokyo because I did feel like things were going to hit the fan, right? Like it felt bad.
Right.
And so I moved back to Japan. I thought, home advantage in a way. And it worked out really well, but it was a difficult time in Japan from 2008 for a few years because the banks were undercapitalized. There were a lot of deals that needed to be done. And, Japan suffered from 2008 because the global economy was so weak. So it was a tricky time to be there working from 2008 to 2010-ish, but it was also a lot of fun. I mean, if you could find the flow, you could actually do quite well.
Right.
And then after that, Deutsche Bank sent me to New York. And then I was in New York. And really, when I got to New York, to be honest, I was somewhat ready for a change, and my family are sort of all entrepreneurs, of varying success. And but we all sort of have a go. And, I felt when I got there that I was, like Paul Krugman, and he was right. Larry Summers was wrong. I didn't think it was going to be inflationary. I thought the world was going to be kind of deflationary. Interest rates were going to be low, this, that, and the other. And I thought the best thing to do is buy sort of cash yielding assets. Okay. And so I looked around. Yeah.
Before we do that, can I ask why you felt that way? Because like a lot of people, I just want to remind everyone, there was the famous, op-ed that was signed by 200 of the quote unquote, smartest market pundits and economists out there. And they were all worried about hyperinflation. And here you were thinking there was going to be just the opposite. What made you think that?
Japan, I think. So Japan had put a lot of money into the economy. They had a very loose monetary policy, but, velocity of money sort of slows. I didn't see a doomsday scenario. I thought, because of that experience, I was looking at the States going, well, if wages are going lower, if this is going, where's it really going to come? Like, where's the inflation? And like Larry Summers, for example, has been seeing inflation around every corner since the 70s. And so I felt like, don't really believe it. So that's kind of how I sort of came to the conclusion that, and it was a bet, but,
it was the right bet, not only that.
Yeah, it was lucky, I suppose. But Paul
some
Krugman,
people are lucky enough to be born smart, and others are smart enough to be born lucky. Maybe you had both. Yeah, all right. Well, so you decided you were going to buy cash flow assets. And so you go and you try your hand on the entrepreneurs. What do you end up doing?
Well, I looked around for single family homes because I thought, there were some ones that I could actually access and they were kind of cheap. in the southeast. And then I looked at multifamily. That's a bigger ticket size. And I thought, I don't want to take that sort of punt. And I sort of struggled with the multifamily sort of asset class because there had been so much delinquencies, in 2008. Right. And because the rent is at a certain level where some people just can't afford it if they lose their job. So I had that in the back of my mind, like things were going to be tough, right, for people. Okay. And then a friend of mine said, you got to read this guy. What this guy's written. And this guy had written about paying the wrong cap rate and losing your shirt. And I thought, I got to go and meet this guy. So, and that ended up being my business partner in North Carolina. Okay. And so I flew down there. And when I flew down there, I went down in a velvet jacket, which my wife had bought me. And I remember the guys on the trading floor going, they're gonna lynch you. But they didn't lynch me. It was actually quite positive. And I met my business partner, who ended up being a mentor and very positive person in my life. And he was in the mobile home park business. And we just, I ended up raising a lot of money for him, and we bought a lot of deals in the Southeast, all the way up the Midwest to Southside Chicago, Gary, Indiana, Alabama, all over the place. Right. So
and what he had a kind of a macro big picture view, or almost a secular view, that these assets were too cheap.
He was a financial planner. Mike was a financial planner. Then he went, got into multifamily in Florida, sold at the right time in 2006, discovered by accident mobile home parks, believed that there was just, this opportunity. They cash flowed really well. And obviously, I think he agreed with me on the macro picture. But from his perspective, he could just see that they were great assets to own. There hadn't been any public housing built in the US since the 1990s. And, unfortunately, a lot of people were suffering out there. So, where would they live? And so he ended up buying a few. And then by the time 2011 came along, there was a lot of portfolios from the banks that were available because, it worked its way through the system. People had paid the wrong price in 2007. And so we took I was the lipstick on the pig, to be honest. He was the brains. He went after these things, and I tried to help him, where I could. But, we ended up, I think it was a very good trade because it was before the institutionals investors got involved, right? And they ended up paying big prices and all the rest of it. So some of the exit strategy was to sell to some of the institutional
the Blackstones and the stuff of the world that started buying big chunks of portfolios. Like, did you put together portfolios so you could give them a bigger piece, like a portfolio of mobile homes?
Yeah, that's really interesting. So that's, that was the strategy. Again, we sort of looked for around, say, North Carolina, Raleigh-Durham area, some parks that you could put together, or in South Carolina, and then sort of sell that aggregate cash flow to an institutional insurance company or something,
I got it. Now, sometime along here, you decide you're going to start writing. Where did that come from?
That came a lot later. So, I actually wrote a book when I was in the States.
Oh, you did? You didn't tell me that.
Yeah. What's the name of the book? I know it's kind of a weird thing, but so I was applying for a business visa there. So it's called the EB-5 program.
Yeah.
And so I'd set up this business, had 10 employees, and we were making some money. And I applied, and it just took forever. There was a massive backlog. There was a lot of people from China applying at the same time. By that time, I was in LA because my wife wanted to live on the West Coast, and it was. And so I wrote a book about my experience of applying for this visa. And then it says, I think that the book is How to Get a Green Card Through an Investment Visa.
I just found it on Amazon, and Mateen, you got to change your picture on there. It looks like you're 12.
That's before the man boobs and everything else. And then unfortunately, I didn't get the visa because it just took forever. So I wrote this wonderful book about how to do it, and I didn't get it. So, It's just because applying for visas in the States legally is actually quite difficult. It's like,
I can imagine. Yeah. You need a
and
lawyer, whatever.
I just went, and so we moved back to Australia and then did a corporate advisory business here. I've been very focused on private companies. And then the reason for the newsletter is my daughter Rose, she's into rowing. Everyone gets up really early here. I was the only idiot in the house who got up at the crack of dawn on a Sunday. Everyone else could sleep in. And I had to do something. And my friend said, why don't you put down all your, numerous ideas on a piece of paper? And that's the start of it. And it's been incredible. It's the most organic thing I've ever done, actually.
Listen, I've been reading it and going through it, and it's just awesome. And your economic history is what really struck me the most in terms of you talk about things in the past and your knowledge. Like you're younger than me, but you were like, there was parts in here that I was reading. I was like, oh my God, I didn't know that actually. Like there was a bunch of lines that I thought that I'd never seen. But let's just talk, I guess, a little bit. Let's get into it, because one of the things that you've been focusing on recently is Japan.
Yes.
Now, a lot of people probably know the Japan bull story for equities, but let's just review it in case people don't, because I think there's a fundamental backdrop of why Japanese equities have done well recently. And then we can talk about whether that has changed. So let's just kind of rewind before go back 6 months. Why were you bullish back then? And has that changed? We'll eventually get to.
Yeah. So I think just go back a bit further. So I left in Japan in 2011 for New York. And in 2011, Japan was on life support, right? It was, on its knees, right? And the banks had just been recapitalized, but generally I would try to hire graduates, and none of the graduates seemed happy about life. They seemed really depressed, like
really?
these kids out of uni. Yeah, it's the effect of deflation. It just saps the energy out of kids and, young people, risk takers. And then I went back in January, and I'd been back 3 times this year and spending some time with startups. The energy is there, right? Kids want to make some money. They want to have a go. It felt amazing, And then I visited a whole bunch of companies, and all the reforms that were put into place 10 years ago are coming together now. Like every company I visited, raising dividends, doing something with their cash on the balance sheet, trying to, different strategies for commercial, distribution, digitalization, everything was going on, buybacks. And I thought, wow, imagine that if we're in the early 2000s. That's exactly what everyone wanted. And it's happening now. So I think it suffered a bit because I think in a way the market moved really quickly, actually, over the last few years. And, people are saying, well, is it topping out here? I don't think that's the case. And I think the yen being so weak, has hurt people's, willingness to jump in, because they're like, well, if I buy it, I might lose on the currency if there's a crash.
I've heard that so many times. Yeah. You hear that all the time. People are like, oh, I hear it. I like the story. And, and the trouble is the currency is going to crush me. And now it's the opposite. They're like, well, I don't want to buy it now because the currency is going up and it's going to crush the economy.
Yeah. Well, I see.
Yeah, listen, we'll get to that. 1 second. You mentioned this kind of change in attitude, and I'm going to quote your letter here because I thought this was fabulous, and I wish I had written it. You said, what the Milton Friedman fanatics forget is inflation is not always bad. Inflation works for the young, the risk taker, and the indebted. Deflation just works for the old and the already rich. In 2011, the Japanese young were lost. Today, company formations are amongst the highest amongst young people are skyrocketing. I thought that was terrific. I guess I've never thought about that it was more than just the economics. There's actually a change in attitude, and you actually saw that firsthand.
Yeah. And I think we're sort of, being sold this narrative that inflation is always bad. I don't think it is. I mean, it actually sometimes creates a positive effect. And we're seeing that in Japan now. Deflation is actually something that's very scary. And particularly for young people, I think, if they're optimistic about, things improving, it just lifts everyone's spirit, right? And in Japan, it was a great place for 20 years, 30 years to be actually rich, because your ski pass didn't get more expensive, your bento box didn't get more expensive, but the young people were suffering, and that's the point. And also, if the middle class, in Japan as well, would own homes. That was probably most of their assets, and the house prices were not going up, so there wasn't that wealth effect. Does that make sense?
Yeah, no, completely get it. All right, so they put into place policies that are much more pro-business. And you mentioned the fact that some of these policies are policies that have taken a decade to get through, but there's also policies recently that have made them kind of completely change. Like this thing about, like, if your stock is listed on the stock exchange and you're trading below book value, you have to explain why and show how you're going to fix it, right? Like they've taken very pro-market reforms, right? And is this, would you argue that this is a secular thing and it's not just like a couple of policies? This is like a complete change in the way that Japan is organizing their society?
Yeah. So, historical analogies are dangerous, right? You say, well, this is just like this, and this is invariably not always true. But I do think there's certain periods in Japanese history where, you've had this moment which is top-down driven, which is saying we're going in this direction, right?
Okay.
So the classic one was Meiji Restoration, post Second World War, and now, with Abe-san, who was an amazingly courageous leader, in my opinion. I think the UK should have someone like Shinzo Abe, right? To get it on the right track. That's very controversial, so let's not stay on that. But essentially, he set a plan and they've executed, right? And this is top-down driven. In Japanese, they say gyosei shido, which is administrative guidance, like directing the nation, but it's working. And I think that's something that's quite an achievement, actually. Yeah.
All right. Now let's get a little bit about the issues that we've had over the last few months in Japan. One of them has been, you touched on, and you said the fact that we've had the currency was extremely weak, and it ended up being that everyone did this carry trade. And maybe you could explain what the carry trade is, and also why you think it's bigger than most other participants or pundits might envision.
Yeah, okay. So the yen carry trade, or any carry trade, is sort of borrowing the currency and with a lower interest rate to invest in something with a higher interest rate, another currency. So, since probably 1994, when Japanese rates went below US rates, people have borrowed Japanese yen to invest in US debt or wherever but mostly US debt or US assets. Now, what is interesting is I don't think people sort of aware of it, but they haven't spent much time thinking about it, right? And interestingly, I think it was crucial to the GFC, right? We're told when, you watch Big Short, it's entertaining, it was exotic dancers with bad credit and, mortgage brokers who caused this big decline in the US. The banks avoided culpability. They increased their balance sheets ridiculously, in the early 2000s. And then you had the situation, and they used Japanese money to do it. And then the Japanese said, we're not renewing the loans. So, famously, Dick Fuld, when at Lehman Brothers, what he had an issue with was the Japanese loans when he was asking for a bailout. People forget that, right?
Yeah,
and so
you highlighted that in one of your pieces, and I didn't even realize that the Japanese refused to roll some of their debt, and that's what caused the issue.
Yeah, it's part of the issue, but it's, I think AIG and all these groups, they didn't have really an incentive to declare all this stuff. But I think that, Japanese funding or finance, Japan has financed a lot of stuff since the early 90s, right? Okay. And so, and for example, when you look at Alan Greenspan, when he raised rates and then the economy did well, right, in the sort of mid 90s, perhaps that was due to, Japanese capital being in the system that meant everything flowed okay. So there's a whole bunch of historical moments where you think, actually, could it have been the Japanese carry trade that actually helped out the US? Now, right now, you have a situation where, I think Jerome Powell is very far behind. He needs to cut rates, right? And the Bank of Japan, is looking to normalize rates. And so you've got this situation where people are now quite rightly nervous, and you had a somewhat of an unwind in early August. But that's just the hedge funds, the CTAs, all the guys who've got the fast money who, use Japanese financing. But I think this is a longer term thing, right? And the thing is, it won't happen overnight because these contracts are locked in, but we're going to see more of this. But the thing I'm worried about, and why I'm not haven't got too many positions at the moment, is because I think the Bank of Japan might raise again, right? They've done 25 bips and they might do another 25 bips. That's my call, right? Okay. And after that, and that would create a lot of nervousness because people would say that, how the financial pundits do, they extrapolate. They go, oh my God, it's going to go to 1%. It's not going to go to 1%, but it's enough of a concern for me to think if I have a bid out there, it's, a few spreads lower, because I think there might be a time to pick up stocks on another panic. Does that make sense?
Yep. Completely get it. So you're worried about the Japanese continuing along their policy and raising rates, and then this being kind of almost the first leg of the Japanese strength in the currency and unwind of the carry trade.
Well, the yen carry trade will exist. I don't think it's a complete unwind, but I think maybe it there will be some deleveraging going on in the US economy. And I think that's probably been on Jerome Powell's mind, right? Now, the thing is, sorry.
So no, keep going. I didn't mean to interrupt. Sorry.
Yeah. So I've wondered, why isn't Jerome Powell taking down rates, right? I know it's a controversial topic, but I think we beat inflation a while ago, right? And actually, this is hurting people with the rates, and it's hurting areas like commercial real estate. What's he doing? Obviously, I don't think he's a particularly courageous man. I think he loves his data dependency because it's a cop-out, right? Yeah. But, at the end of the day, I think he is a bit worried about this deleveraging thing. And there is a lot of interaction between the Fed and the BOJ, and it's not always that friendly.
Oh, really?
Does that make sense? Yeah. I don't think so. I think
that they're battling more than we think, like in behind the scenes.
I think the Bank of Japan have been frustrated with the rates being this high in the States, right, for a while. And you saw that last year at this, there was this panel in Portugal with all the central bankers. It was just amazing. It was 4 of them. Bank of England, Europe, States, and obviously Japan. And Ueda-san then, who's the governor, I mean, he was quite funny. He's quite a funny guy, actually, in English. And he's quite pointed, some of the comments he made. And he also, about rates in the States. And he also said, importantly, that, the second half of this year, if inflation looked like it was, actually on target, which is going up over there, they want it to get more, then he would try to normalize. And I think there's signs that that's the way it's going. So that's kind of why I think at the moment, I don't want to be too punchy,
Right. I think it makes tons of sense. And one of the things that you wrote is And this is why I love your writing. You're not afraid to just pull no punches. Powell is the worst Fed chair ever, you wrote. And I thought that was a little bold, but I actually think someone that you might be right about the worst Fed chair ever, but I actually think the worst central banker right now is actually our guy, Tiff Macklem at the Bank of Canada, because he is just as like timid as Powell is, but we actually have a lot more problems here in Canada. Like we're like Australia in that we have way more debt. We have, floating mortgages. We're feeling the pain way more than the U.S. is. And I think is everything you want to say that's bad about Powell, I think I can times it by 2 on Tiff.
Well, yeah, I mean, Canada has always been like a massively favorite country for the family. And, I actually owned property there once in British Columbia near Kelowna. And I do love Canada. But there's been a lot of interesting things happening over the last few years. I don't want to sound too controversial.
Oh no, that's all right. You're allowed to shit all over Canada.
I don't mean that in any way. I actually love
no. I'm talking about not shit all over Canada that way. I mean, like, obviously, you can have an opinion about where the financial markets are going that has nothing to do with the people or the place or how it is to live. And I think this is a problem with too many people in the world. You think like if you say the US dollar is going down, you might interpret that as like you're bearish on US. I'm bearish on the US dollar. Like it could very well be that in essence, I still think the US is the best performing economy. I just think that versus what's expected, it's going to be less. And therefore the US dollar could go down. So I think too many people take too many things like that personally, and they shouldn't. It's like, it's an asset class. All right, let's talk a little bit about your piece that you wrote about Google versus United States. One of the things that I thought was interesting, and this is where I get back to this idea that you write a lot about economic history. I didn't really understand how much changed under Reagan in terms of monopoly issues and how the world changed during that period. So I was wondering if you could walk us through what has happened in terms of the US and how they deal with monopolies over the last, 50 or 100 years, whatever you feel best tells your story.
Yeah, so controversially, perhaps, we might as well be a bit controversial.
Yes.
So I think there were families that lost out on the New Deal back in the 30s, and they funded the Chicago School of Economics, all the monetarists. They didn't like John Maynard Keynes, who basically came up with most of the policies that Roosevelt had. And they sponsored Ronald Reagan quite early on because he was, the potential opposite to Kennedy from the early 60s.
I've never thought about it that way. Wow.
So, yeah, that's kind of way. So this is just my opinion, right? So,
it's an interesting way to think about it for sure.
And so you basically have Keynes discredited, in the 60s when inflation starts to tick up. And then in the 70s, basically the US lost a lot of confidence because everything was going wrong and the monetarists appeared. Now, we celebrate Ronald Reagan and he did some amazing things, right? But we don't analyze enough what was happening in the early 80s, in my opinion, late 70s. And there were big changes, right? And one of them was around monopolies. And so in the late 1970s, and political contributions, right? Okay. So in the late 1970s, there's a couple of acts, I've forgotten what they're called, by the Supreme Court, which essentially meant that money could flow into politics. Up until that point, it hadn't really happened. So that's one thing. And that's very important to remember for later. And then, Ronald Reagan, who represented very much Milton Friedman and all the some of the good things from that philosophy, basically said we're not going to enforce some of the traditional anti-monopoly rules from the past, right? And so what you have then is in the 80s, and I spoke to an old chap about this from the States recently. He said, the States had changed over 10 years. right? From early 1980, the towns, right? So you had lots of different shops and hotels and everything. Everyone. By the 1990, it was, Howard Johnson. It was it was very, the concentration of power, commercial power into a few big companies happened in the 80s. But of course, Ronald Reagan had no idea when he was pushing this about digital products, right? So digital products, Microsoft had just sort of started in the 80s, early 80s. But by the 90s, the scalability of this stuff was just incredible, the internet and everything. And then come the 2000s, you get this situation where Silicon Valley is a monopoly-making enterprise. It's not an innovation hub anymore. The goal is to build businesses with scale, right? And those companies make a lot of money. Those companies lobby the politicians. And because of those rules back in the 70s, they can lobby them with a lot of money. Yeah. And so when I look at the Google antitrust stuff, is it material? I don't think so. I think this lady, Lena Khan at the FTC, she tried Microsoft. That was a very difficult case to win. But is she going to be replaced soon? Maybe. Is she empowered enough? Probably not. But you're going up against some very strong characters and influential people. And that's the difference from maybe before Ronald Reagan implemented or said, let's not focus on the antitrust stuff. Does that make sense?
Yeah, for sure. Do you foresee us as a society making a shift just like they did in the 80s when Reagan got there and said, hey, wait, this is the way we want our society to go? Is there a chance that we as a society start to go, hey, look, these tech companies have way too much power. We're going to make them break up. And I think one of the things you talked about in your article is how they broke up AT&T.
Yeah.
And
yeah.
So is this, do you think that that's the real risk to the Mag 7 is that society changes its views? And because ultimately this is a choice we're making as society to allow these guys to have this amount of power. And do you foresee a chance that that changes?
Well, I think we had less divisive politics in the 1960s, right? And it's interesting that I think, was it Lyndon Johnson or someone? No, Nixon, I think, started the AT&T breakup, and then it was finished by who's the chap who was the president just before Reagan?
Carter.
Yeah, it was finished by Carter, so it went across board, both sides of the aisle, right?
Right.
And do we have any of that sort of consensus at the moment? On anything? No, it's very divisive. So you kind of need a political will to change this. And unfortunately, I don't see that happening for a number of years. And that's why, going back to stock strategies, I think you can ignore some of this and just buy the stocks. Like scale is still going to be the most important, one of the factors that drives equity returns, in my opinion, right?
Okay.
For the next 5 years. Whether that's good or bad, Kev, to
doesn't
be honest,
matter.
I don't know.
This is you want to get the trade right. It doesn't matter what you think. It's what will happen. Okay, so let's go back to stocks, because although we talked a little bit about Japan and then we talked a little bit about the markets, and you are from a tactical point of view hoping that you might be able to buy it kind of lower in it if we get a little bit of a sell-off. Let's just put that aside and say that when you do get the sell-off that you're looking for, what sort of stocks are you going to buy? What should people be thinking about?
Okay. So in general, I believe, my basic thesis is interest rates are going lower in the US, right? So I think in a way, the economy might resemble what the economy was before COVID, right? So low growth, lower inflation, lower interest rates. And so in that sort of environment, I like large cap stocks, tech compounders like Apple. I think Apple's still interesting to me. I might dig deeper into Google. But those are kind of the large cap names which have got high return on invested capital, are going to grow, right? That's the sort of name I like. And then separately, there are obviously software companies and stuff that I think are kind of interesting. But interestingly, non-tech, I really like home builders. And this has been my trade that's been a long-term position, but I'm pretty sure that they will, I'm hoping anyway, this is not financial advice, but I'm hoping they'll do quite well for the next, few years. It's kind of like, there's this, Ed Hyman, who's the economist. Yeah, I love reading his stuff.
ISI, right?
He's so clever, and but sometimes he calls it really well, right? And so basically, in the 2000s, he said, housing was going to be the NASDAQ of the 2000s, and I think home building might surprise everyone, right? Does that make
completely get it. And if you think about it, one of the things is that we're not building enough houses, and we're going to have to solve that somehow. And even if housing prices don't go up, that doesn't mean housing stocks don't go up. And I think that's one of the things people confuse too often, right? Like, and if we're building more houses, they're going to make more money. And so that makes a lot of sense. Now let's go back to a little bit about Japan. And the other thing you've been highlighting in terms of Japan is that this is like private equity is scooping up companies left, right, and center. Like it's as they said in Top Gun, it's a target rich environment. Why is that, and what's going to happen? How do you think that plays out? And maybe you could give us some examples of some private equity deals that are occurring there.
Yeah. So I think the bottom line is, I think the global private equity industry is suffering. There's it's actually quite crowded in the US, and there's not many exits, right? So the exits are up, I think, last year, but they're still pretty low, the value. And so they're looking for areas to invest globally, right? So the big guys, KKR, Bain. So then where do you invest? You can't invest in China, really, because everyone's sort of being burnt there and it's not working. India, it's, there's lots of growth, but I think some people are there. But Japan has a lot of things going for it. It's obviously, in my opinion, quite cheap. There's a lot of IP in the companies, market share. It's the nation of conglomerates, so there's a lot of sell-off of assets potentially that they could be involved in. And there's a lot of big themes. So, KKR and Bain are in this sort of bidding war for Fujisoft, which is, a play on digitalization in Japan. It's a big IT provider. And that's one they've just been involved in. It's not a massive deal. It's a $4 billion deal. So that's one area. And I think just it's really interesting from a historical point of view. So Henry Kravis at KKR has said, he thinks Japan reminds him of, the US in the 1970s sort of time, 1980s. And that's fascinating, right? Because we forget that in the 70s, there weren't very many independent board members. They were doing all funky stuff. They didn't really care about shareholders. And actually, one good thing about Friedman, they focused on that whole movement, focused on shareholder returns.
Right.
And so the same sort of dynamics in the 70s in the US are very much apparent in Japan. And Henry Kravis is seemingly, from what he said, quite bullish about Japan's opportunity set from a private equity perspective. And I think what you'll get, the other thing is, obviously, Japan's got a lot of capital and the banks lend, right?
Okay.
And they lend sometimes 7 times, in leverage, right? So, from a strategic point of view, you can actually do really, leverage buyouts effectively in Japan, more so than perhaps even in the States. So there's a whole bunch of reasons why I think it's kind of interesting. And the way I think you play it is look for companies which potentially KKR could come along and maybe try to take over. Or you go down a notch and look for companies which smaller private equity companies might try to buy. And there's a whole bunch of those, which hopefully I'm going to publish in the newsletter. Or there's one listed private equity stock there at the moment, which, I do have a position in. And so,
can you tell us the name of that one?
Non-financial advice, but it's in
We all know.
582. Yeah.
58. What's right?
So I think it's going to be volatile because the free float's not great. But, I think it's going to, non-financial advice, sort of trend higher, because
we all know you're not telling people to buy it. You're telling them this is what you've bought.
Yeah. So what happens in Japan is very much so it's a thematic market. So data centers, there'll be a bunch of stocks. There's just not a lot of liquid, publicly listed private equity plays in Japan. So that's why I thought it was interesting.
Right. What's the number again? Because I think I missed it, or I spoke over you. Could you tell us the name and the number?
Oh, 5842 JP.
Okay. And that's the.
Imagine if it's up like 30% next week. That'd be great.
And what about the banks themselves? Because one of the trades that I've loved is 1615, which I think is hilarious in Japan, how they're all numbers. They really should do symbol, I guess. But 1615, and it's the bank ETF, and it's been one of the up until recently, it had been one of the best performing kind of bank sectors out there, and obviously it's having trouble. Do you have a view on the banks, or do you think that do you have anything to add, any color?
I think mega banks are really interesting. I think you've got a NIM story there, so net interest margin is going to increase.
Yep.
And also because of this beautiful thing called inflation, that's working in Japan, house prices are going up. People are feeling optimistic. Companies are investing. They all need loans. So the volume of loans is increasing, right? So it's a double positive for the banks. Now, in Japan, you've got the mega banks, and then you've got a whole bunch of smaller banks, the regional banks. I'm not interested so much in the regional banks. It's just the mega banks. And the only concern I have at the moment is, they sometimes do funky stuff, right? So, they'll invest in, have exposure to Lehman Brothers in 2008, for example. This company like Alzora. So you just got to be aware that you're picking the safer option. But in general, I think, they should do okay.
Can I tell you a quick story about my days I'm going to be like an old man, or like when Bruce Springsteen talked about his glory days. But I remember when I was on the desk in the 90s, and we used to get these orders from Japan around their year end. And I guess, is that October? If I got the right number. And it would be the craziest shit that would send you to jail now. It was like, okay, buy like 3 million of this, do it right at the close, and then try to cross 10 million of this. And it would just be insane. I'd be like, these guys are just nuts. And I didn't really understand what was going on. And I guess there was some tax issues, or I don't really get it, but I definitely understand what you're saying when you're saying that they can do some funky stuff.
Yeah, and you just got to be a bit aware of it. But in general, the macro theme, I think they're better than the US banks at the moment, and I think they're better than the Chinese banks. Chinese banks have done pretty well this year. I think, my view is interest rates might go lower in China, so you sell those. But Japan, there's a few tailwinds, right?
All right, you brought up China. Let's just kind of briefly touch on that. One of the things that I think occurred with Japan is that they were stuck with the Richard Koo balance sheet recession, and they kept trying to fix it with monetary policy. And I think that it really took some fiscal, and it probably took the world's fiscal in terms of COVID for them to really get out of it. But that's neither here nor there. They suffered from a balance sheet recession. Then the balance sheet recession moved to Europe, and they had a balance sheet recession, and a pretty bad one. And that's why they had negative rates. Do you think that, and then given this, I kind of looked at China and said, there's no way they're going to make the same mistakes as Japan and Europe made. Yet I look at it and it almost seems like they are making the same mistakes. Now, I had on the show earlier, Louis Vincent Gav, that argued that, yes, you're looking at it from a perspective of an equity holder and saying they're making this mistake. But if you're looking at it as a citizen, it's actually not as bad. I was just kind of wondering if you could comment and give us your views about China. What's going on there? Are they making a mistake? Is it about to change? Is there any opportunities there?
Well, I think, there's a lot of China is going to collapse porn on the internet. It's, you just look around.
One second. Can I interrupt here? Because you actually had a line about our friend Kyle Bass. And, I think I have to share it. And I was saying that I am allowed to share this because as a baldy, I am actually allowed to make fun of guys that are losing their hair because I am losing it. I'm going to read this so you don't have to read it. The last point that needs to be made concerns a common misconception. No matter what a foreign fund manager like Kyle Bass says, his hair recedes each year, but his self-confidence seemingly never does. That the Bank of Japan is incredibly smart people. So poor Kyle Bass, you're throwing shade on him. What's your problem with Kyle Bass and his view on Japan, and more importantly about China?
Well, I think the BOJ were given lemons and they made lemonade, right? So it was a very tough situation in the 90s. They've handled the bond market, which was the important market to handle, very well, and they've kept people like Kyle Bass guessing all the way. That's why it's a widowmaker, and I think sometimes we don't really appreciate just how smart some of these Ministry of Finance or Bank of Japan people are. They would be Goldman Sachs partners, if they lived in New York, like they are very smart. And, so I think Carl, I often just wondered what his edge was. And the trade never seemed to work, but he always seemed so confident. And I just find that difficult for me to understand sometimes. Like if it, but anyway, that's just Carl.
All right, so bring it back to China. And before I interrupted you, I had to share that story because it made me laugh so much. China, are they making the same mistake as Japan and Europe did by allowing the country to slip into deflation and struggle with this balance sheet recession?
I think, China has a few options, right? First of all, it's, you have a situation in China which is similar in some ways to Japan, but different in others, right? So there's no real industrial recession there. It's actually growing. What's it growing at the moment? 5%. Right. And they are doing some amazing stuff, right? In terms of, getting their tech working and going in the right direction, the EVs, the batteries, the solar, and we forget that. And Japan didn't have any of that. Japan's 90s were a bit like the 1970s for the US, in my opinion. It's when both countries lost confidence. I think China hasn't necessarily lost confidence, right? I think we sort of see always like university grads aren't getting jobs in China. And, that's one thing that comes up on LinkedIn, is like, it's the end, or, something's, that startups, there's not so many Chinese startups. And you're thinking, well, they are making a lot of progress in tech, right? So does that really matter? And you and me know, like, we probably went through stages, or at least in the 90s, when you couldn't get a job coming out of college. It's, there's a certain cyclicality to this. And then, the property stuff, yes, it's a concern, but I do think I think we're just a tad bearish, too bearish. And so, what can they do? They can, cut rates. They could have a big stimulus package, because the economy is much bigger than it was back in 2009 when they sort of saved the world, I think. And, I've bought some of the Chinese tech companies. So
you have?
I think, so Alibaba, JD.com, and Baidu. And Baidu sort of, everyone says Baidu looks awful on the chart, and I'm not the best chartist, so it probably does. But, Alibaba, I think, they produce a lot of cash flow. If I'm right about the interest rates going down, can you see their equivalent of tech compounders do very well over the next 5 years? It's not going away, right? Alibaba. So I think it's kind of a long-term position. Maybe I'm wrong, but it's not a big position, but I'm involved. Right. Yeah. So in general, I think, this year you've had outperformance from the Chinese banks. I think they're kind of a little bit more vulnerable if I'm right about the interest rates.
Okay. All right. Before I let you go, I'm just going to ask you, you talk to a lot of really smart people, a lot of clients and stuff. What have I failed to ask you about that's kind of on people's mind that you might want to kind of share with us? Is there anything I've missed? Anything you want to talk about?
I think it's stuff like private equity and privates, Okay,
like, so let's talk about that.
Everyone is sort of so, they've invested in stuff and in funds. And I think people are starting to realize that liquidity is important, right? And you've got this thing called NASDAQ, which is the greatest creation ever, right? For all of us. And yet you're going to put money away, for 10 years with some fund, which may or may not get great results. The other thing that's interesting to discuss is, in a world of numbers, it's very hard actually to pinpoint what the returns are for some of these funds.
Oh, right? Yes.
And people, one of the chaps who's, obviously very well heeled, he's a very nice friend of mine. He said, you just don't know, like these multi-strategy funds, exactly what are the returns, and what are the returns of some of the US VC funds, right? So it's quite cloudy, so I think what would be great is if you had on TV, if someone was talking and they were a professional investor, not like me, who's just a basic amateur, you had like the numbers up, like a baseball score, right? 1 year, 5 year, 10 year, right? Like then you could start to sort of analyze it a little bit easier.
Well, the other thing they do is this idea about the on some of these private equity deals, they don't call the capital. So they'll say, okay, you have to be ready to give us 100 cents on the dollar or give us the money whenever we have a deal. And then the trouble is that, in the meantime, you're only earning whatever, now front end yields are actually high, but in the old days, they used to be like 1%. So you'd be earning 1%, and then they'd call finally they'd call your money, and then they would earn, let's say they earned 15% during the time that your money was called. But when you looked at the returns over the blended with the money that had to sit there at 1% waiting to be called, it wouldn't be quite as good. And that's one of the things that I think that is very much missed in terms of the returns.
But what a model, right? It's such an amazing model that they came up with. And actually it's probably the best rebranding ever, because corporate takeovers in the 80s sort of, are the private equity groups of today, right?
Right.
And in the early 90s, you couldn't go to a dinner party in New York and say you're a corporate takeover specialist because there've been so many scandals.
Yeah.
So I find it really interesting that, it's actually brilliant, the rebranding.
For sure.
Private equity, it sounds
I was actually convinced before the GFC that it was going to be them that was going to be the villains of the whole thing. And then the banks managed to screw it up even way worse and take all of the kind of the limelight from them. So I was always kind of amazed. All right. So before we let you go, we're going to have to ask you about the triple Bs. And what you have to do is share with us something that you've recently discovered that is either a band, a book, or a broadcast. And a broadcast can be a TV show, a podcast, whatever you like. So do you have a triple B for us?
Well, I did see this podcast on Invest Like the Best, which is about this business called Tiny, which I thought was kind of interesting.
Tiny.
And my business partner, sent it over to me. And it's basically the chap is working with VC rejects and companies in the private tech space, which are special situations. Okay. And because I've worked so much in this space over the last 6-7 years, I see the opportunities. Right, a lot of stuff could be good businesses, but they're never going to be a unicorn. Right. And they could be cash flowing, they could pay for your kids' education, to the founder. They could have a normal life and run a good business if they just gave up the dream of, getting into Forbes. And, it's apparent to me that, I thought it was a very interesting strategy, that guy. It made a lot of sense. And, there's a lot to it. I'm not doing it justice, but I thought that was good. Yeah.
Right. So that's Invest Like the Best with Patrick O'Shaughnessy. And I believe it is Jeremy Giffen. And
that's right.
Yeah. And he is.
Yeah, I thought it was really interesting, what he's saying.
There we go. Well, thank you very much for sharing that with us. All right. Thank you very much for your time. Before we let you go, let's let people know where they can find you. And first thing we're going to do is, you said that you are on Twitter, but you don't have a lot of followers. So let's start with this. We're going to get your follower numbers up. What is your handle on Twitter?
It's at Discuss the Tape.
Discuss the Tape. Okay. So for those that are interested, and there you are. Okay. And there's a couple of kangaroos on the beach. All right.
Yeah.
So that's the first thing we're going to do. Everyone go follow the Mateen on Discuss the Tape. And then next thing we'll do for those non-Twitter people that want to learn and read your long form stuff, they go to Substack. Where do they find that?
Again, the name is Discuss the Tape. Is the Substack newsletter.
And you can go, and right now it is free. So go do it. You can see all the old copies. You can see all the financial history. I did not do my readings justice, and they made me laugh so hard, a lot of them. And it was a real pleasure having you on the show. Thank you very much for getting up so early and being such a sport.
It's been fantastic. Thank you so much for inviting me.
Thanks again. Take care.
Thank you. Cheers.
Testing 1, 2, 3. Okay, start that up. Okay. Are we going, Daniel? Sorry?
Cold water.
You want to go get a glass of water? Yeah, sure. Go ahead. Yeah. No problem. I thought he was wearing a towel there for a second.
Imagine.
Mateen Chaudhry.
You should see what shirt I have on underneath this, to be fair.
Are you wearing pants?
Yeah.
Mateen, when you got up, I thought you were wearing a towel. I thought that was a bold move.
No, shorts. Yeah,
I know.
Everyone wears shorts in Queensland.
Well, it's okay. I'm not wearing any pants at all. So that's, it's.
Yeah. Trading in your underpants. Yep.
That's right. And the good news is this is all being recorded, so Daniel can put it in the outtake.
Yeah.